Hey, what's going on, my friends? It's me, Sean's assistant. Good to see you. Let's get straight to the point and start with the first one. So the first one is Binance spot trading. So it's basically like a normal trading where you buy an asset at one price and you sell it for another price. The difference between the buying price and selling price is your profit, and the fees for this are very low. It's only 0.1% for each trade that you make, and there are no hidden fees. What you see is what you get. The second type of trading is future trading. Now futures are a little bit more complicated than spot trading, so let me explain. Let us say you believe that the price of Bitcoin is going to go up in the next few days. With future trading, you can actually take a position on the future price of Bitcoin. So you can actually lock in a price today for Bitcoin, and then you can buy it in the future at that same price. And if the price of Bitcoin goes up, then you make a profit. If the price of Bitcoin goes down, then you still have to buy it at that locked-in price and then sell it at a lower price. So you lose money. Now, the fees for futures trading are a little bit higher than spot trading. It's 0.05% for each trade that you make. So it's 0.5% higher than spot trading. But there are also other fees that you need to be aware of when you're redoing futures trading. For example, there's something called funding rate. So every time you hold a futures position overnight, you have to pay a fee. And this fee is usually around 0.03%. So it's not very much, but it's something that you need to be aware of. There are also other fees, like liquidation fees and transfer fees. So you just want to be aware of all of those different fees when you redoing futures trading. The third type of trading is optional trading. So with optional trading, you can actually choose what price you want to buy or sell an asset at. So let's say you want to buy Bitcoin at any price above $40,000. You can set an order to buy Bitcoin at $40,000. And if the price of Bitcoin goes down to $40,000, then you'll be able to buy it at that price. If the price of Bitcoin goes above $40,000, then you won't buy anything because you only want to buy it at $40,000. So with optional trading, you have more control over the price that you want to buy or sell an asset at. But the downside is that you might not get the price that you want. For example, if you set an order to buy Bitcoin at $40,000, but the price of Bitcoin goes down to $390, then you won't be able to buy it at $39,000 because you only set your order at $40,000. The fourth type of trading is copy trading. So with copy trading, you can actually copy the trades of other people. So let us say you want to copy the trades of a professional trader who has a lot of experience and knowledge in trading. You can copy their trades and hopefully you'll be able to make the same profits that they make. So with copy trading, you don't have to worry about making your own trading decisions. You don't have to worry about when to buy or sell or what price to buy or sell at. You just copy the trades of someone else, and hopefully you'll be able to make profits. Now, which one is better? Honestly, it depends on your experience level and your risk tolerance. If you're a beginner, then I would recommend sticking to spot trading. Spot trading is the most simple and easy to understand out of all the types of trading. And once you have a little bit more experience and you want to start trading futures, I would recommend starting with future trading first and then moving on to options trading and then finally copy trading. Alright, thank you so much for watching this video. I hope you enjoyed it. If you did, please give it a thumbs up. And also subscribe for more videos like this in the future. Have a great day.